Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do an update, the Las Vegas real estate market. We just did one last week, but we've been doing them every week.
Most weeks.
Most weeks. We've been doing, we skipped a couple weeks. So this chair is squeaking here. I'm going to adjust the chair. So you guys can focus not on the noise of the chair, but on all this great data we have. We have a ton of data. And so what we'll do is, why don't we just jump right into it?
Okay.
Okay. So we'll start with these stats that we always go through. Median list price, $584.9. Let's just call it $585.
Okay.
It was $580 last week, and it was $530 December 15th.
Mm-hmm.
So it's the median list price right now of homes in the MLS is up $55,000 since December 15th.
Holy moly.
That's a ton. I got other charts are pretty eye-opening too.
Yeah.
What's going on? Why is the market... I mean, we were told 40, 50% price decline, and here we are, market's just tearing.
Right. I mean, look, supply and demand. I mean, I'm beating a dead horse, but that's really what's going on. We have very little supply. We have more demand than we have supply, and that's where we are. Does that mean that you can price your home absurdly high? No. I mean, the market is still efficient. Your home is still worth what a buyer is willing to pay for it. And buyers, just because they come from out of the area, that does not make them ignorant of home value. So please understand that. A home is worth what a buyer is willing to pay for it and what a seller is willing to accept.
Yeah. The next one, this is the per square foot, 271. I think it was 270 last week. It's up a buck. 258 December 22nd. Put this in perspective. It's $13 a square foot. That means if you have a 2,000 square foot house on average, it's worth $26,000 more
Okay.
than it was in December.
Okay, so if it went up $1 a square foot just over the course of a week, that means that it went up $2,000.
Yeah, and people are saying, oh, but the $300 a month difference between what I would pay in a mortgage and my rent, I can't afford the $300. And then you miss out on $26,000. I mean, that literally isn't, and I hate to go into this rant about home ownership.
Okay, but so look, as far as the values are concerned, this is for entertainment purposes only. Remember that, because you're not, just because your home went up $26,000 over the last couple of months, that's not exactly $26,000 that you can put in your pocket today. The only way that you access that money is if you either refinance or you sell the property.
Right, yeah.
So this is just appreciation. Remember, real estate is the long game. It's not a piggy bank that you can just use like an ATM machine.
I took a listing one time. This guy, every day, he said he would check like Zillow, I think, to see what his house was worth. Like, it's not even the value of the house. Like, how would Zillow know what the house is worth? And I had a startup founder of a pretty kind of famous company, well-known startup, who I was talking to one time this few years ago, and he said, I told him that, the Zillow's, how would they know what the house was worth? He goes, oh, I just thought they knew. Like, I thought that was what it was worth. Like, the price, that's it. Like, no, they don't know. Okay, here's the next one, inventory. December 1st, we had 2,600 houses. Remember, this is just single-family homes in Vegas. This isn't like if you in Boulder City or Pahrump or Henderson or whatever. 2,000 is the current number. So we've lopped off about 25%, about a quarter of the inventory. Mm-hmm. I've got another really good chart to show this. What's going on? Is this pretty normal?
Well, there hasn't been anything normal in a while. So.
Normal since the thing that happened that we can't we can't name it.
No.
But after the thing that happened about 4 years ago, it's been a little erratic. But this whole inventory thing, this is not... How does the fact that we have super low interest rates and people just locked in housing, like literally, look, if your interest rate was 8% 20 years ago, and then you could buy a house and get 7%, you would be like, oh yeah, I'm going to sell this house and buy the other house. Right. You would never keep the other house. You would always sell it, extinguish a higher loan.
Right.
That was a function of, the buy-sell was a function of interest rates declining over about 15 years straight. Mm-hmm. Now that interest rates have tanked, everybody locked in low rates almost, and then they've gone up. We have the opposite effect. Now nobody wants to sell, and nobody, even if people that are buying aren't selling. Matter of fact, have we had anybody buy, which is rare for us because we don't work with many buyers, that actually had to sell to buy?
No.
No.
No. But I do want to defend Zillow a little bit.
Oh, it depends Zillow.
A little bit. So Zillow is only as good or as bad as the data that it has. So in a market where there's a lot of activity, Zillow is actually more likely to be pretty accurate, not right on, but pretty accurate because they've got a lot of data points. But in a market where there's not a whole lot of activity, which let's face it, most markets right now, there's not a whole lot of activity, then that means they have very few data points. So that makes Zillow less accurate. The other issue with Zillow is that Zillow only has those list prices and sold prices, but they don't know about the condition of the property. So if your property is so much nicer than the other property that's sold, then Zillow doesn't know that. And the opposite is true. If that property was super upgraded and yours is pretty much normal for the neighborhood, Zillow doesn't know that either. But a buyer will know because a buyer will have the opportunity to view both properties, and that's when a buyer determines what that property is worth to them.
Here's the problem, and I think you nailed it. It's what the house is only worth what the buyer, that specific buyer, thinks it's worth. It's not like a loaf of bread where you walk in the store and you pay, $4.50, which is about what a loaf of bread goes for now. And it's a $4.50. That's it. That's it. Everyone pays $4.50. The homes don't work that way. I could say, hey, this house is $300. You could say, I don't care. I hate it. Like, I'm not going to spend $300,000. I would never live in it. Like, it's not worth it to me, or yeah, it might be on paper worth $450, but I don't like that it backs up to a road. Whereas somebody else say, I don't really care that it backs up to a road. I'm looking at these other things that it has a big backyard or whatever. Right? Okay, here's the next chart, Market Action Index. This is just a chart of how hot the market is. Now, this chart is actually, so what I think happened here, I think that whoever does this chart at Altos watches the video. If you look at the very top, the top is 100. Remember, it was 110?
It was 120 at one point.
It was 120, I think. It's now, it only shows 100 as the top. So I think somebody said, hey, why does our index chart show a 110 or 120 when it's really not up that high? And then, so here's the actual chart. The bottom is 20, not 0. 40 is actually a normal. It's not 50, it's 40. 40 is the balance between a seller and buyer market. And you could see that it wants to stay around 40. If you look at that 40 line, in the 2 years after the thing that happened, which a lot of was low interest rates, we had the 2 hot years. So even though, and if what's interesting is you go back to May 2021, home prices are way more today than they were in 2021, even though it was hotter back then. Which I think is interesting. But you could see this thing is still kind of, the trend is that the market's getting hotter. It'll probably keep doing this into April, maybe May. A couple of months, and then maybe it'll kind of chill out and inventory will build up again.
It's possible, or it's possible that it might continue depending on what happens with interest rates. Because if the Fed does even hint at lowering interest rates in the summer, then this trend might continue longer than usual. We'll put it that way. I'm not even going to say the word normal anymore.
If there's a good indication that the inflation is under control and that we're actually in an expansion phase and the Fed can actually try to loosen up monetary policy a little bit, that could really it could cause rates to go. Remember, the interest rates lead. Remember, all the interest rates rose before the Fed was done raising rates. The interest rates took off and then they started to fall. Remember last year, there was a period from late, I think October to January, where they fell over 1%. Mortgage rates fell over 1%. Okay. Next one here, price per square foot. As you see the dots, that's the same day the last 3 years. Today, which is the middle of March, you could see home prices per square foot or more than any year ever. Ever. So that today is a record price. We might even beat that. Looks like we're probably within 2 weeks of beating that little peak. Man, little peak was fake in 2022 because interest rates were starting to go up and people just panic bought, right? And we were experiencing that because we were listing homes back then and the people were just in a frenzy. I got to get this house. Interest rates are going to go over 5. Remember that?
Yeah.
But this looks like, really, if you look at this, if you just take out that little hump, this is kind of a normal market. The market's just, homes are appreciating like they always do.
Yep.
Right? That's a matter of scarcity.
It is.
What about new homes? Are they building thousands of new homes to flood the market?
No, they're not building thousands of new homes. Thousands of new homes across the country, but not in local markets. Building in local markets is a function of what they can pull permits for, the land available, the labor available, the material available. So all of those are limiting factors. So are they building homes? Yes, but they have all these limiting factors, so there are not a sufficient number of homes being built to address the demand.
Okay, here's the inventory. It's hard to get a good perspective on this because it only goes to 2019. The last 4 years have been sort of abnormal. Last year, 2022, you could see it tried to get back up to a normal inventory and then it immediately started dropping again. And we're falling now. But you can see every year for the last 4 years, the inventory has continued to drop. Probably keep dropping. It'll peak prices will probably happen in May or June. And then who knows? They could level off. They could go up. They could keep going up. They could go down. Normally, in a normal year, Juana, what does home prices do from spring to fall in any market?
So spring to fall, they basically kind of start tapering, and then in the fall they start going down before they start going back up.
Okay, yeah, and so, but if you add interest rates into that, because remember, interest rates today are about 6.8%, and in the fall, if we have 5% rates for some reason, then all bets are off.
Yeah, I don't envision that for this year.
Okay, but I'm just saying if that happens.
Right.
Okay, this is another one. This is kind of interesting one that we wanted to show you. So down on the bottom here, you see these market segments, and it's the quarters of the market in Vegas. So that 1.35 million is the top quarters, the middle of the top quarter. So it's basically 12.5%, which means 1 in 8 homes is 1.35 million or more. Juan, if I'd have told you 15 years ago when you and I were selling 500-600 bank-owned homes a year that were like 135 grand, that you would have 1/8 of the homes in the valley over 1.35 million, what would you have said?
I would have probably checked your temperature.
Okay.
And maybe made you blow into the little breathalyzer thing.
Yeah, that's pretty crazy. The middle, if you look at this, the middle of the market in Vegas has got to be close to high fives.
Yeah.
Yeah, 499 is the middle of the third quarter, and then 385 is the middle of the bottom quarter. In 2009, 310 wasn't the median. Do you know what was significant in 2009 in Vegas? About $310,000.
That was the beginning of the upper end of the market.
10%. Only 10% of all homes in 2009 in Las Vegas sold for over 310.
Yep.
90% of homes sold for under 310. That's pretty crazy. But what's interesting about this, if you look at where it says new and absorbed, if you look at that bottom, more 149 absorbed. What does absorbed mean? How they fell into the ground, absorbed them? They sucked them in?
No.
They drank them up?
Yes. No, they were sold.
They were sold. And only 130 new. The other segments of the market, there were a few more listings than sold. Is that pretty normal?
This time of year, we should have a lot of properties coming on the market. We should have more properties coming on the market than being absorbed because they should be coming on at a faster rate because this is the time of the market, the time of the year when people want to put their homes on the market to get them sold before the end of the school year so that they can move at the end of the school year and go to their next home because they want to be situated before the beginning of the next school year. So that's generally what happens. That's not to say that this only pertains to people with children. This kind of hits everybody all the way across the board because spring is the selling season. So even people without children kind of fall into the same category because they want to get the whole thing over and done with before the summer heat here in Vegas or whatever's going on in their lives for a summer vacation, whatever's happening. So that's kind of nationally the way the home selling cycle works.
Another interesting thing about Vegas, we have about 4,000 houses in Vegas, or 400,000 houses in Vegas, about 2,000 on the market, which means 1 in every 200 houses is on the market. Now, you might think, is that a lot? No, that's not a lot. It's historically been way more as a percentage. As a matter of fact, most a lot of subdivisions are 200 houses, which means that you'll have subdivisions where there's maybe one or no house on the market. A market that we bought a rental in 2 years ago, it's like 600 houses, and the houses are all the same. They're 1,600 square feet, 3 bedrooms. They're pretty decent. They make great rentals, and I think one in the last month has come on the market, and there's literally nothing on the market in that, and it is below that middle number. It's below 500,000, so it's kind of in the price point where if anything came on the market was reasonably priced, it would probably sell within the day, right?
Right, but it would sell to an owner occupant because they're priced in the mid 400s. At that point, it's very hard to get them to cash flow if you're financing. So that's the other thing that's happening is investors are finding it very difficult to find properties that make sense right now. So owner occupants actually have an advantage because they don't care about cash flow, they care about getting a home. So they actually have an advantage in today's market.
We get a lot of people contact us and say, hey, I want to buy a property in Vegas, but I don't want to pay over $400,000. I need to get over 8% in our annual ROI. And I'm like, no, that's not going to happen.
Right.
Like in 2009 and 10 and 11, you could have done that. You could have got something to pay 10% a year. Matter of fact, you could have got something to pay probably 12%. You could have got something that would pay you 1% per month. It was not unreasonable. There were a bunch of houses that you could have got for around $100,000 that would have paid $1,000, maybe $1,100 a month back then. Those houses today, are $2,000 plus for the same. That's what those homes rent for. So people who paid $100,000 for them are now sitting on $2,000 a month, $24,000. It's 24%. So that you can see what happened is they paid. It would be like buying a stock that says, hey, we're only going to pay you 8% the first year, but then every year we're going to raise it by a half. And your initial investment's still the same. It's that money that's been spent, but then every year you just keep getting a bigger and bigger return.
Right.
Which is kind of fun. Okay. So based on everything we've seen, this happens every spring.
Yes.
Should people be alarmed that home prices are going to take off again? And
no, I mean, this is just kind of the way it goes. I don't know, this is a fun year, right? We have the thing that's happening in November.
Can't say that word either. I'm sure it'll punish
but we all know what that thing in November is. It's the first Tuesday in November. You guys know what that is.
Yeah.
So we have that thing going on, and then we have all the other exciting things happening in the world. So all of those kind of breed uncertainty in the market. It makes everybody nervous. I happen to think that at some point, like I said before, people go, you know what, that's the world out there, my world right here. I need to get a place to live, and this is what I'm going to do. Sellers, on the other hand, I think they're still, I thought that they would kind of get over their low interest rates by now, but they haven't. So sellers seem to have decided that they're just going to stay put. They're not going out there and putting their homes on the market. If they are buying, they're buying without selling.
Agree. The one, we had this, Juan and I had this conversation today. We're talking about home prices versus the interest rate. And as you kind of know, a couple years ago, if you follow our channel.
And if you don't, please subscribe right now.
Do it right now. Do it quick. Okay, this is what happened. A couple years ago, as home prices were screaming, we looked at everything and said, well, home prices are going up, but we could see that there weren't a lot of homes on the market. Remember, we just had a huge run up in prices. And the Crash Bros, who is a generic name for the people who they always think housing is like for 5 years in a row now, every year since 2019, it's going to crash this year, and this is why. They make up a bunch of stuff. Ridiculed us by saying that we were delusional and things like that, because we said home prices would probably moderate. They'd find a new place to be, but they wouldn't just crash, because you're assuming, why would everybody rush to sell their home when they're going to have to pay even more? Like if you've got $1,100 a month payment, this is always been my contention. If your home is $1,100 or nothing, because remember, 42% of people nationally pay zero.
Right. So just so you understand, like for example, last month the numbers for Vegas, it was still around 29% of transactions closed cash.
Okay. The other thing too is in Vegas, over half we're over 50% of all homes, of every home in the valley, is free and clear.
Right.
So they pay zero. Why would you sell the house and then go start dumping money into a rental? Like, you have to go find a rental, and then you move all your stuff in the rental. And what if they want to sell it a year later? You get a 1-year lease. Now you're going through this crazy game. Like, once you're in your house, you want to stay in your house. And I honestly believe, I criticize the Crash Bros because a lot of them didn't sell their homes. And we know this because we can find out who these guys are. We go look them up in the tax records and go, hey, you didn't sell your house. You saying, if you knew for sure home prices would fall 50% and then a year later you could buy a similar house for half the money, you would sell it, but no one did it because you don't want to do it. Like, why do you want to move out of your house? And either that or they just knew it wasn't going to happen and they were just, a bunch of hyperbole and everything. But the bottom line is it's very hard to get somebody out of their house when it's a good deal. Right? And it's a good deal if you have a super low payment or you don't pay anything. You never want to move out of the house, right?
Right.
Right. So all the people we know who own their homes free and clear or refied are, none of them are selling. Like, nobody's selling.
Nope.
Yeah.
But we do have people buying.
We have people buying.
Yep. All right. So hopefully this was interesting. You had a bit of fun. I actually defended Zillow. Mark that on your calendar. It doesn't happen often.
The one video I deleted off the channel of 1,300 videos. It's because the CEO of Zillow, I made a video that was very unflattering. Made a video that was unflattering to Zillow, and the CEO watched the video and then reached out to me and let me know he was very unhappy with the video. And I thought about it for a couple of days, and I emailed back, so okay, I'm going to delete the video. And I literally just I didn't hide it, because then you can still grab the link and see it. It's gone. But this was probably 10 years ago or something. Okay. It was pretty unflattering. Okay. But I was right. I thought I was right. But anyway.
All right. So enough about Zillow. Please remember to like this video, subscribe, hit the notification bell, share the video, leave us your real estate related comments. If you're in Vegas, tell us where you are and what's going on in your particular neighborhood. If you are elsewhere, tell us where you're watching from and what's happening in your market. We love hearing about your market, and we'll see you on the next video. Bye.
Bye.